Basically, the first chapter is to talk about what an enrolled agent is and the different type of credentials there are between an enrolled agent, a CPA, a tax attorney, and everybody else. Well, they delve into questions. Some of these programs, they do ask questions, do you have a W-2? But they really don't delve into you. They don't get into certain things when we just talk. Computers don't talk back to you. Sure. Everybody has a role to play when they're either filing a tax return or getting involved in what we call tax controversy. That's getting a notice from a simple, what's called a CP 2000, that the IRS says we have certain documentation that you didn't report on the return or something different, different numbers. Everybody has a job to play in that, a role to play. The IRS created what's called the Taxpayer Bill of Rights. We call them TBOR. Basically, there's a few of them that basically is right to be represented, right to pay a fair tax, a right to be treated, let's use the word nicely, not to be harassed. So there's, well, sometimes you just can't avoid an audit. It's just what's called you throw something against the wall and it sticks. The best way to avoid an audit is make sure your return is accurate. And then, well, I call it almost like the birthday card. What ends up happening is every year if you owe money and you're on an installment plan, they're going to send you, happy birthday, you owe us this amount of money. So it's a little kiss saying, come pay us. Well, you don't know how many times a client will come into a new client and said, oh, I received a notice. Well, it's not a notice. It's probably about 15 unopened envelopes. Well, the IRS is not going to take blood from a stone. Based on certain rules, we can get 85% of the debt reduced if you qualify.
Rarely.
Pay them. Now, if you can't pay them, that's what these alternative collections are. There are also what's called due process hearings. You can set up appointments with the IRS and petition for a hearing to say if you can't pay it, and that delays the process. Well, that's called innocent or injured spouse. Prime example. There's a big difference, though. A lot of people use it the same way. Injured spouse means, for example, one spouse has a student loan, a federally guaranteed student loan that they're in default of, and they take all the refunds. The other spouse, and it happened even before they got married. The other spouse is fine, but they're taking his or her refund. That's called injured spouse. You can make a claim, you do some kind of calculation, and the other spouse, the injured spouse, will get back part of their refund. There's something called innocent spouse. That's just, say, I'll give a prime example. The husband took a withdrawal from a retirement account, did not tell the wife, did not put it on the return. They got audited, they got one of these CP 2000 notices, and now all of a sudden they owe $25,000 in tax. Yes, that's one of these things called an offer in compromise, and one of these alternative collections. An offer in compromise basically means, all right, I'm going to pay you X amount of dollars, pennies on the dollar, whatever that penny is. It could be up to 85%, it could be 18%, it could be 27%, whatever it is, and the IRS wipes out your debt. About 15 years ago, the IRS started this program using private debt collectors, and they wanted to collect these old, stale debts. It didn't work then. So after about, like I said, 15 years or so, they created this program again. Absolutely. This is not a get-rich-quick scheme or a get-out-of-debt scheme. Even if you go through a bankruptcy, which is another alternative, it takes time.